Can Google stock beat back the bears? I personally think that Google can outperform the major U.S. indices over the next 5 years, like the S&P 500, but it won't be without a fight. For example, just today alone, it was down 3%, down again after hours, down about 20% in the last month. And they just reported their first quarter 2022 earnings. Wall Street Journal calling out how you're seeing slowing sales growth on digital ad tumult. The reality is, though, that this is a business that's still growing 24%. Their Google Search and other business, $39.6 billion. This is from Google Search and other Google-owned properties like Google Maps, which is just growing at an exponential rate as they find new ways to integrate with merchants to effectively benefit from the e-commerce that they drive. And not only are you looking at hyper growth with their existing properties, but you're also looking at YouTube. YouTube isn't growing as fast as a lot of people hoped. It's currently around $7 billion in revenue, up about 14% year over year. Now, this shouldn't come as a complete surprise, partly because you're seeing a lot of competitors, effectively vie for folks' interest. And you saw on Netflix's most recent earnings call where they showed the market share of various different players, showing YouTube effectively down a little bit year over year. Now, as you understand Google, and if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, no hype mission focused channel, trying to find you exceptional companies and unrivaled investments. As you consider Google, you need to understand what actually drives their business over time. And so, for example, as we look at Google, the reality is 80% plus is still advertising. Yes, this is a $68 billion revenue company during the quarter, $68 billion in the quarter, but 80% plus of that was advertising. Now, that's still up an amazing 22% year over year. Now, if you look at some of Google's other segments, like their other revenue segment, which is their second largest behind advertising, this was also subdued with only 5% growth. Now, this was partly because that they took a big cut out of the Play Store, where previously they were getting a 30% cut. Now it's only 15% because they think ultimately that's a good way to avoid, let's say, monopolistic practices. That said, their hardware has been growing very, very well, like the Pixel 6. Now, you look at Google Cloud, their third largest segment, up 44%. So that is a bright spot in their quarterly earnings, and it's a good data point to focus on. The challenge is that you all look at other cloud competitors like Microsoft, which also reported their first quarter 2022 results, and your calendar quarter, and you're effectively looking at a business that's multiples their size. Where effectively Google Cloud is effectively one quarter what you're seeing with Microsoft Cloud about. And Microsoft Cloud is growing at a very healthy rate of 32%. So yeah, Google Cloud's growing 44%, Microsoft's 32%. It's going to be a long time before Google potentially even catches up. Maybe it won't. And that is a really important data point to consider. Now, you have other bets going on as well, which oftentimes doesn't get much interest, but their Wings autonomous drone delivery delivered 50,000 parcels during the first quarter. That was up 3x year over year. I mean, some of these segments will generate immense value over time. I even did a whole video about their latest developments in AI and how I think they will be revolutionary, not only for the company, but for humanity in general. I mean, this is going to be game-changing stuff. I highly recommend you check out that video. But you look at this business, and not only are they growing their top line, but they're increasingly profitable, growing their profits by 22%. Now, you might get distracted by seeing their net income slightly lower. That's because you had this change effectively in other income as their equity investments declined. So overall, focus on the core fundamentals. And look, this is the goal with this channel. I'm focused on whenever you look at a company, you need to understand three things. What's the valuation? What's the underlying fundamentals? And what's the cash flow profile look like? And we talk about all these aspects and more in this video talking about Google when we want to understand it. So when I'm looking at the fundamentals, I'm saying this is a business that's still growing at 20% plus, and it has immense free cash flow generation that you can see here. You're talking about earnings of around $20 billion. That's pre-tax earnings, but earnings of around $20 billion for the quarter. Now, is this enough to beat off the bears? Will this be enough to beat, let's say, if a recession happens? And that is a little bit trickier to answer. We'll talk about that as we consider the valuation. What is Google worth First, I just wanted to quickly mention I just did a big overhaul of my Unrivaled Investing website, and I'm also offering short-term, limited time discount on the subscription as my prior Patreon subscribers are porting over to this new website. So if you're interested, check that out, unrivaledinvesting.com. I have currently a limited time discount that's going on there if you're interested. And so what's going on with Google? Once again, I previously mentioned, they have three different things that you need to understand with every company. You have fundamentals, you have valuation, and you have cash flow. And what management's saying is they're saying, turn on the cash flow, turn on the fire hose. Because what you're seeing with this business is they announced a $70 billion stock buyback, and you're starting to see the share count go down a little trickle at a time, but it could increase with announcing huge buybacks like this. This will play a role over time. Now, look, it is a $1.6 trillion company, but look, if you announce nearly $100 billion buyback program, and they easily could with $140 billion effectively in cash and stock on their balance sheet. So they could easily fulfill this in a short order if the stock price falls down. And this is an advantage they have, let's say, over a lot of other companies, that strong free cash flow profile. So they are turning on the fire hose of their free cash flow. But as I wonder, can they beat back the bears? It is worth understanding that part of their growth, the reason why they grew by 20% plus, was in large part because retail and travel were so strong, and they were the two largest contributors behind their growth during the quarter. If there was an economic contraction, does that mean they would also be proportionately hit? I personally think so, and that's something that you want to consider as you consider their valuation. Now, I'm currently looking at this, and now keep in mind, with every company, I want to think about those three different components. What's the fundamentals? Here it is. Fundamentals are very solid, growing 20%, lots of free cash flow. What's the free cash flow? Is it getting returned to shareholders? Yeah, they're looking at $70 billion. They could do that fairly quickly if they wanted to. So then the next component is, what's that valuation? Thinking about that third key piece. Are we overpaying or is it cheap? I've personally called out that I own Google stock and I've bought it previously. So the question is now a potential buying opportunity. I personally do think that Google will outperform the major stock market indices in the years ahead. That said, as I already alluded to, it will be a bumpy ride. Let's look at this valuation component. And currently, let's say it's around $2,300 a share, between $2,300 and $2,400 a share, nearly a $1.6 trillion market cap. Looking at Google services alone, and I have a whole range of assumptions. I'll share more with my Unrivaled Investing subscribers weekly update. But thinking about this business, penciling out a range of, let's say, slower growth, outcomes in the years ahead, and 7 to, let's say, low teens % growth in the years ahead, and profitability around their current levels. I'm effectively saying this current market cap is effectively pricing in just Google services, around 1.5 trillion to, let's say, 2.6 trillion in value. This gives effectively no value. Effectively, the current market cap effectively gives no value for Google Cloud, other bets, and their cash on hand. So that is worthwhile. The question is worthwhile to understand. The question is, what are these things worth over time? Is it possible cloud isn't going to be worth a $500 billion over time because they're facing just such tough competition, and maybe their margins never get to, let's say, 20-30%. Maybe it's actually only going to be worth $100 billion over time. And this is a hypothetical framework to consider the valuation for Google stock. And once again, you want to check out the disclaimer that I have in the description of this video. This is by no means financial advice, but I look at this, and this is sort of the upside potential that I think investors are potentially playing for. This does not factor in what happens if there's a recession. Because if there's a recession, maybe, your growth rates come down and you see significant pressure. But if you see, let's say, stable and continuous growth in the years ahead, even a significant deceleration in growth, you are potentially looking at a return that I'd argue is probably better than, let's say, the major U.S. indices. Because you're probably, what I'm thinking is you're potentially looking at somewhere between mid-single digits to, let's say, a mid-20s% return over the next 5 years. Now, a lot depends on how they perform during the economy. A lot, depends on how does, let's say, Google Cloud play out. But looking at this, and maybe you could say I'm just being way too conservative because other bets I'm only giving $10 to $30 billion valuation. maybe, you think about everything that DeepMind's doing. And I keep in mind, I did a whole other video talking about their developments in AI. And, maybe that could be worth much more than $30 billion. I mean, in that video, it's effectively talking about how you're probably going to get artificial general intelligence within the next decade, which Google might play a big role in, effectively an artificial intelligence that you could be talking to and that it understands you better than an average human would. So check out that video once again. And so, I look at this and I'm just really blown away by it. The challenge, once again, is that 80% plus of their business is still tied to advertising. Advertising very much is tied to the economy. And so if you see an economic downturn, if there's increasing concerns by the market, the bears take over and sort of say, hey, there's a recession coming, I think, Google could continue to come under pressure. Am I personally selling my stock, my Google stock right now because of, this pressure? No, I'm looking at this right now and I'm saying, hey, they posted solid results. Am I looking to buy more? That's something that I'm going to need to think more about. I will post it to the Unrivaled Investing subscribers. And so I look at this and I'm saying, relative to a lot of companies out there, I think Google has a lot better of a risk reward than probably most companies. I mean, you got, once again, think about that value. Think about it from that 3-step framework when you consider any company. You're having $70 billion in cash flow getting returned to you as a shareholder. Relative to that $1.6 trillion valuation, that's a couple of percent that's effectively getting returned to you as a shareholder in a tax advantage way. The other aspect is valuation, where if Google Cloud could be worth a lot, if other bets could be worth a lot over time, then what you're saying is, yeah, you're not really including a lot of that upside in the current valuation, as Google services alone could cover this current market cap. So you talk about valuation, you talk about, cash flow, and then the question is the fundamentals. Will they continue to grow in the years ahead? All the data points suggest that they continue to do really well, and they find little niches at a time that are just sort of revolutionary, like exponential growth in Google Maps and finding ways to partner with retailers. So I'm continue to be very impressed with how Alphabet or Google performs, and I'd love to hear your thoughts. I'll be talking more about Google in the weekly letter for Unrivaled Investing subscribers. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.